Let's get some analysis on these jobs numbers today. Joining me, one of the nation's most respected economists, Saul Eslake, who is principal of Corinna Economic Advisory based in Hobart. Saul, thanks for your time as always. What's your reading on those numbers today? Obviously, the headline figure can be deceiving.
Yes, in particular, the unemployment rate is a misleading guide to the state of the labour market at the moment. By my calculations, the effective unemployment rate in September, taking account of those who've dropped out of the workforce or those who are still counted as employed but didn't actually work any hours, was 10.6% in September. That's actually down 0.1 of a percentage point from the figure for August, but it's well above the most recent low of 5.7%. The good news is that that number's probably going to fall quite quickly over the next 2 months. It may be that New South Wales is opening up this week, and now the ACT will have come too late to be reflected in the October survey, which would have been in the field last week. But I would think by November, we could have seen a net rebound in employment nationally of over 250,000, and the effective unemployment rate coming back down to, say, 6 or 7%, and likely to fall further in the new year. So although these numbers themselves show declines in employment and a slight uptick in the unemployment rate, I think looking through them, the situation is probably as good as can be expected.
Okay, so in that context, do you expect a V-shaped recovery here, that we won't be entering another recession?
Well, I think we have been in a recession over the last 3 months. I'm one of those people who doesn't accept that a recession is only when you get consecutive quarters of negative growth in real GDP. You can have, as we've had, an increase in the effective unemployment rate of more than 3.5 percentage points in the space of 3 months. To me, that's a recession. It's a short one, and we'll be bouncing out of it, I think, fairly quickly from this week onwards, hopefully through at least until Christmas. And so while we'll probably get a -3 or more for the September quarter, when those figures are released on the first Wednesday in December, I suspect we'll get a +3 in the December quarter when those figures are released in the first week of March. So although I think we have been in recession, we're coming out of it, and I would expect that to be reflected in the employment numbers, if not, as I say, in the October figures, which will come out in a month's time, because the opening of New South Wales and the ACT has probably come just after the ABS has finished doing the October survey. But come the November numbers, when Victoria also ought to be out of lockdown, I think we will see a big rebound in employment and a fall in both the effective and the official unemployment rates, hopefully taking us back to somewhere near where we were in May, when things started to go pear-shaped as the Delta variant of the virus spread.
And Saul, so underpinning that expectation, how big is the latent demand in our economy, do you think?
Well, there's quite a lot of latent demand within the economy because households' financial position has been well shored up by federal and state government support schemes. But at the same time, people haven't been able to go out and spend the income they've been receiving, whether from the government or from their regular employment. So since February last year, household bank deposits have risen by something like $183 billion. That's money that's available to be spent. We know from last year's post-lockdown periods that households are eager to spend when they're allowed to do so. Now, it may be that people are a bit more cautious as we emerge from lockdowns in Sydney and Canberra this week, and hopefully soon in Melbourne, because unlike the exit from lockdowns last year, people will be aware that COVID's circulating in the community, and even if they're vaccinated, they may have some chance of catching it, although hopefully not going to hospital or worse as a result of that. But there may be a bit more caution. It's also possible, if our international borders are relaxed and people are allowed to go overseas, that some of the money that people have been squirreling away since the pandemic began will be spent, in Bali or London or
Yeah.
Singapore or somewhere like that, rather than necessarily in the shopping centres and high streets of Sydney or Melbourne. But even putting those considerations to one side, I think all the signals are that we will see a strong rebound in both spending and employment. The Reserve Bank certainly picked up in its liaison with the business community that was reported in the statement following last week's board meeting, that employers are looking to hire a lot of people once they're allowed to, which they are from this week in Sydney and Canberra, and presumably soon in Melbourne. And until we start getting immigrants and students coming back, that means that those people who are looking for jobs don't face a great deal of competition in finding them. The real issue is whether they have the skills that are needed to do the jobs that are on offer. And in a number of cases, that's probably not going to be true. But I suspect that we will see quite good growth in the economy now as we come out of this short, sharp recession. And hopefully that will continue into the second half of 2022.